Welcome, Eric Mwad with Mother.com with the weekend market analysis for January 28th and 29th, 2023. This is how US markets are shaping up. I'm recording this midday on Friday here, and we can see for cryptos, we can see BTC is trading at 23,134 or 143. We can see that Ethereum, which is down this week, is down for the day, down about 0.4%. For the week, we can see the NASDAQ is up nicely, 4.3% currently. The other noticeable movement is Ethereum, which for the week is down about 2%. S&P 500 is up about 2.66%. Let's take a look at those charts, begin with the NASDAQ. Now this, for me, is the chart that gave me guidance for the entire week. Why? Because the NASDAQ was moving its RSI above 50. And even on that down day, I believe was Wednesday, it flirted with going back below 50 but held above 50. So for the week, this was telling me more than likely we are going to close with a nice gain for the week, and we are going to close towards weekly session highs. So that has been a good guide for this week. By the way, for the first time in a while, we are now back above the 34-week moving average. The last time we did that was here, and just be warned, or at least let's be cautious here, because if we end up moving back below that 34-week moving average, that could be a trap. And previously we had stalled here around the 34-week moving average. So it's just something to watch. Personally, I don't see a reason here to be bearish. The market is nicely higher. Remember, the market had a fantastic shakeout here. I mean, this is designed to get you out and to make you very bearish. And they know very well, trust me, they do, that the market will be here in a few weeks. They are the ones buying shares here. So anyway, that's a side note. One level we can watch is this level here, the recent weekly closing high from November. I would say it's a nice line on the sand to have some reference and understanding with, which is 11461.50. So we are above that level. We can say for now, as long as the NASDAQ is above this level, the market should be fine. In other words, as long as we're above this price, the market should be sideways to high. And if we end up dropping back below that level, that would be a reason for concern. The reason why I say that it would be a reason for concern is it would actually blend very well with this breakpoint area here. Remember, this is where the RSI breaks down in late 2021 here, early 2022. And so that RSI level is going to come in play. It's going to have to be questioned. Do you have the strength to clear this area or not? The last time we came close to this area here was a rejection area, and you can see what happened here. We would go lower. So this, in my opinion, this blue line seems very innocent, but in my opinion, this is my uniformity line. This is a big deal. Moving above this line is a must do for bulls. They have to clear this line, otherwise failure. And if they can't move above this line, then we are looking at a market here that could very easily change its momentum and start being sideways to down if resistance takes place on this line right here. If we take this weekly closing high, this weekly closing, and this weekly closing here, we get a nice trend line, which I believe everybody, let me not say everybody, but most traders are aware of. It's this trend line here. And of course, let me clear that chart. That chart is messy. The goat. You feel me? But you can see here, let me do it properly. Right here, this breakout looks good. So this is exciting some bulls. Personally, not a biggie, but I'll show you what is more exciting if you're bullish. It's the MACD. The MACD right here, based on how I approach the MACD, we are moving above this area which has been resistance on the MACDs. In fact, let me show this with the price. All right, now with price, this is where we've been stalling on the MACD, and similar to what Bitcoin is doing. I've been talking about that Bitcoin MACD for a minute, if not many months, but this is where the NASDAQ has been stalling on its MACD. We seem to be in a mood right now to clear this level. So if we can hold and stay above this level, to me this is more exciting, because that's a change. Because all of this is taking place pretty much for the entire 2022 bearish period. And now we are beginning 2023, and this to me is developing nicely for the bulls so far. This is the NASDAQ daily. Do you want to see a good trend line breakout and a retest? Here's one. Take a look at this. We break out here above this previous decline line, which is this area. We come and test it. Also happens to be RSI 50 support, which is this area, and we are off to the races. Now, this is similar to moving above the 50-day, testing the 50-day and coiling back higher. Right now, we're in that area of testing the 200-day moving average, depending on whether you're using the EMA or the SMA. For the simple moving average, the NASDAQ is above it. So let me show you that. So this is the EMA. Don't want to spend too much time here. We are testing it again on the 200-day EMA. And now the simple moving average, the 200-day moving average, and we are above it. So this is encouraging a lot of bulls, and we're also above this daily range where we had seen resistance. So there's a lot of good things here that the bulls can be excited about. These were resistance areas, and now we're above it. So there's a lot of good things that is taking place this very past week. If the market can continue holding above this area, generally above it, and remember, we don't have to go straight higher. We can always come back and test these things and eventually build higher. So it's not going to be a straight shot to the moon. It's going to have its bumps along the way. Let's take a look at the Dow weekly, because I believe the Dow gives us the leadership perspective. The Dow already bottomed here in October. All right. Really not a big surprise. But if you take the weekly closing from here and here and this weekly closing, you get a nice trend line, and the NASDAQ is breaking out above its trend line, but the Dow broke out in November right there. And more importantly is this breakout here was tested and it has held successfully. So a couple of weeks here, tried to break this area here but held. The next challenge for the Dow is it would need to clear this recent weekly closing high, which honestly is not out of the realm of possibilities. This can be easily taken out, and if it does, it's only going to force the institutions to chase the market, which means higher prices. So another way of saying this is, until such a time as we break below this area here, the markets are screaming and have been screaming that they are sideways to higher in the weeks and the months ahead. This Dow weekly chart also has another perspective, which is this line here, which you can see we break out. This is what I call a swedge breakout. Breakout here, back test successfully here, and back test here, and now above the line. So all of these things are adding to the fuel for a market that has an appetite for higher prices. And just like we saw with the NASDAQ, this break here from early 2022 has been tested here. It failed in August. And so we need to be vigilant here to see how the market responds in the coming weeks around here. Of course, bulls want to see the market clear this uniformity line and move higher, while bears would want to see a week-to-week resistance, which could begin the market trading sideways to lower. Take a look at the S&P 500 from a MACD perspective. Lower prices here, improving MACD. So that positive divergence was a clear signal in October that these markets were in a mood to recover. Should not have missed that. If you did, why? In the here and now, this is a level to watch, just as I was showing you with the NASDAQ, and similar to BTC, we are moving above this range where there have been resistance, and now we are approaching zero. As you move above zero, you tend to have good positive momentum, just like the opposite. When you have resistance and movement below zero on the MACD, this tends to be the reaction. Remember, I've been talking about this for many months. S&P 500 now above 50 on its monthly RSI. As you move above 50, expect a big monthly move. I talked about this all of this month. Expect the month to end towards the session highs for the month. That is just simple use of the RSI as I teach it, based on my research, that is. Taking a look at the VIX, down 8% for this week. We shouldn't be surprised that the VIX is now below 20, trading trading at just above 18, below 20 and in the teens. When the VIX is in this range, markets tend to be moving higher. This is no surprise that the VIX is moving lower, because a couple of weeks ago, I told clients to be on the lookout for this instrument, which goes inverse the VIX, and the buy point was at 14.68. So if you knew how to time this breakout, 14.68 was our entry level, and so far doing good. So no surprise right here that the VIX is lower, this instrument is higher. Also, as long as the RSI is above 69.1, expect this instrument to continue being stable to outright bullish with some strong momentum. While a lot of people are bearish, take a look at this stock, RMBS. It's really had a nice run here off the lows of mid-2022 at 20, now at about 40, let's call it 43, and a recent breakout here. This is why I like to play breakouts. A good breakout right there for a momentum move above 32. This is why I love breakouts. Take a look at this breakout here recently for this instrument, gapped up and a very strong, and is actually even right now attempting another breakout just above 11. And this monthly move was just not a 1 month move. It was a couple of weeks to the upside. So while everybody is bearish, some stocks have been setting up. This is a multi 3-week move to the upside. Again, some stocks are asking the question, what bear market? Take a look at this breakout here. Couple of breakouts, and the last breakout was here in the lower 80s, now trading above 110 over the last 3 weeks, last 4 weeks. This is what we are talking about. Momentum breakouts. This is the way to go. Take a look at STLD. This has been a powerful breaking instrument over the last couple years, and it spent most of 2022 sideways, but towards the end of the year, let's call it about September, it broke out right there at about 85-ish and now trading as high as 125, 120. I've had this stock as a breakout candidate on numerous occasions for paid clients to my website here, and we can see this is the number of times we've had breakout alerts for this stock over the last couple years. Take a look at this stock in the shipping sector, ASC. This one has been on fire, one of the best stocks over the last 52 weeks, and with great breakouts here. This has been highlighted again for paid clients. Many breakout alerts for a quality name that has been delivering great results. And of course, we are watching any future breakout above the $15 price mark. Right now, it is settling down on the second month. If it breaks out, of course, we would have another breakout alert, another interest, just in case it has more upside. How about this name, VTYX, which is breaking out again? And of course, breakout alerts were sent even before the breakout. But more importantly was the previous breakout in September. Right here, I gave out a breakout alert September 1st, and in a couple of weeks, in the same month, stock was up more than 85%. In a couple of days, actually, 85%. It really gapped up. As you might be aware or not, I do specialize in breakout alerts. It's what I've done for 20 years for clients straight. And you can see the breakout alert here, VTYX, was the first one was in September 1st right here. From a weekly, it was this breakout here. Alert was sent somewhere here, and within a week, it gapped up almost 80%. And as you can see, after a couple of weeks of resting, it is now off to the races again. I really think it's kind of funny now that everybody is talking about Tesla up 42% for the month of January 2023. Everybody wants to talk about it. I'm like, what the heck? Really? I mean, over the last 3 weeks, I've been bombarding with Tesla. You can see going back 3 weeks, I've been talking about this stock. It was giving an opportunity here. I had three videos, I'm trying to say here. 3 weeks ago, 2 weeks ago, and 1 week ago here, actually here. I was explaining to you what to look for and why it was giving signals of a bounce. Firstly, on the monthly for Tesla, this is classic Moade uniformity. This method seems so dumb and silly, but there you go. There's your bounce, right? And then the other one, which I kept proposing, also looked very stupid, but here we go. It's the line connecting the prior highs. If you know how to use the RSI, it can get you in nice situations right there. So that's your monthly. And this is what I call the uniformity support. Hence the method is called uniformity. This is uniform. It kissed this area and bounced. By the way, this blue line happens to be around RSI 38.2. It doesn't get any more simple. And yet it is still complex. I get it. In these 3 videos, which you can go back and review, they're all on YouTube. I was talking about using this chart for TSLQ, the ETF that goes inverse Tesla, for your entry for Tesla. And I kept it very simple. I was saying these breakouts here, if they fail on the daily, and they failed, this was an entry for Tesla. That's your first entry. Second entry was when it fails and breaks this area here. That was a second video. That's another entry for Tesla right there. And the third one was this break of this RSI trend line. Friends, this was your next entry for Tesla. All of these were well telegraphed. And right now it's moving below RSI 30.9. So it's having a big down day. Anyway, enough of that. It's been a while since I covered the Japanese market, the Nikkei. And you can see here for the week, last 2 weeks, it's up nicely. 2 weeks in a row, and this is good. And by the way, what I want to show you here is this is the weekly. If you go to the long-term monthly chart, you can see why it's bouncing. And I know these things look very simple and should not influence the market, right? But this is a simple line connecting the lows of 09, lows of 2020. I mean, can it get any more straight? Lows of 2020 there, and over the last couple of months, we've bounced on this line twice. That is a market that has stabilized and is seeking higher prices. As long as the black line, the upward trending black, as long as this line holds, the Nikkei should also be stable to bullish. TSX weekly, I gave you this weekly closing high here from late 2022 as a level to watch, just like we are doing with the NASDAQ and the SPX. And here the level to watch, it needs to hold above that. If the Canadian market is to continue being sideways to higher, it's 20,485.66. So As long as it's above this price, give it the benefit of the doubt. No need to try and go against it. Now remember, we've been talking about this area here on the RSI. This, as I mentioned with the S&P 500 weekly chart, is an area we can't ignore. We have to watch this week to week if we are going to be vigilant for any change in market sentiment. Of course, you'd want to be above this if you're bullish, as we've talked about. And resistance here, by the way, this is also similar to the cryptos, which I'll get to here in a little bit. But resistance on this line could lead to a pullback. That's the weekly for the Canadian market. So I want to mention the daily right now is flirting with RSI 69.1, and this is the TSX. As long as it is above 69.1, you give it the benefit of the doubt for higher prices. By the way, TSX on the hourly is showing this declining RSI strength while prices are going higher. This negative divergence going into the new week could set the stage for some type of a short-term pullback because of this improving in prices and declining technical strength. This negative divergence hour to hour can lead to an hour-to-hour pullback. Taking a look at the Indian market, the Nifty this week was down 2.35% as the RSI dropped below 50. So a big down week, no surprise. RSI did drop below 50. Now we're faced with the exact possibility that if we retake RSI 50 in the new week, the RSI having closed just under 48, but retaking back above 50 means a big up week for the Nifty. If that happens, keep in mind, I could also suggest here that there's a level to watch on this weekly chart, which is based on this breakout here. This breakout of the levels there is probably what is being tested right now. If it can bounce back above this line, then it's going to be a re-entry for another move to the upside. So I would say this is down, but is it out for the count? I don't think so, because on the daily for the Nifty, if you take the lows here from June of 2022 and use my uniformity concept, you're going to draw a line as such. Notice how we respond nicely when we hold. We respond nicely when we hold, and we are back to test this general area. So if we are able to hold this line again and start moving higher, then this is where we find support and start moving higher. We are also at an area where many institutions are watching around the 200-day moving average EMA. So I would say for me, I would watch this line here for potential support, line number 1. Line number 2 is another line, by the way, conveniently connecting the lows of the RSI as such. So connecting the lows here, 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 and here, and actually I believe there. So this line is legit. If we break below the line on the Nifty day to day, then we see lower prices. But if this line acts as support, then you have to conclude that this market is poised for a bounce. On the 4-hourly or the 195-minute chart for the Nifty, again coming from the lows here, we draw this line as such, and you can see already it's trying to respond here. So I would say even the last couple hours on Friday held, and so that's a level to watch. We can also draw a line connecting recent RSI lows. Everything is converging here. If we bounce on this line, we go higher. If we break the line, watch out, there's going to be a short-term continued push to the downside. I think the biggest risk here for the Nifty is the long-term structure. We went higher here on a multi-month move to new highs, but your RSI did not do the same, and we did not move above 69.1. So this negative divergence is an issue for the Nifty. Now, I would say the line on the sand is this weekly closing high here from late, let's call it late 2021. And that level, it needs to hold above this level for the market to stay a little bit sideways to stable. And this is 17,959.20. We would need to stay above this price so we can at least maintain the prior breakout, this breakout here. So the monthly is not looking good, but if it can hold above 17,000, let's call it about 18,000, retake that level above 17. And I do apologize, I gave you the wrong number. So let me correct myself here. This monthly breakout. So I'm using this monthly closing high going back to 2021, and the price there is 17,671. We need to stay above this if we are going to be in a market that is still respecting this breakout here. So if we can hold above that, that's good. The more we stay below this price, the more we're in a market that should start changing its behavior, and we could see a major pullback or even a bear market if it stays below this price. Looking at this chart for the dollar by way of the ETF, the UUP, which tracks the dollar, one would assume that this is a distracted and a lower trending dollar. It seems obvious it's going down. We have a crossover between the moving average. Everything is pointing down, but I'm not sure the dollar goes down from here. Now, of course, if it breaks this range, then of course we have to anticipate lower prices. But I think it is concealing its next trend. Why? On the weekly for the dollar, if we take these lows here and here, there is a trend line as such. I'm going to do it like such. And notice how we use it as support here. And now we are back to test it. I think week to week, the dollar finds support. If it finds support here, then the dollar recovers and it's going to put pressure on gold and other related metals that move inverse the dollar. So I would say not to be too quick to anticipate that the dollar goes lower because of this weekly chart, which is showing possibility of support. In my opinion, this could hold right here. Also, since we are coming close to the end of the month, we have to start anticipating that the monthly charts could start being an issue. Take this area here. I'm drawing this line right here. Why? Because we break out here and we have this move in the dollar. I think this is what is going to be tested in the new month. If the dollar turns positive in the new month around here, then this is a dollar chart that could actually move higher, potentially to test the recent monthly closing highs. So support on this line, month to month, will tell me to be careful here that the dollar is going to move higher. Gold and the other metals could be going lower. Now, if the dollar is to go down, you'd want the dollar to break below RSI 50 on the monthly. Right now, what I'm thinking here is month to month based on the weekly and the monthly chart. This could find support here, and that the next major trend for your dollar let me say, is for prices to start being sideways to higher. XLE monthly is pushing to a breakout level here, and that breakout is above 90.22. Right now it is trading at about 91.55. So this breakout is now intact. This is now still in the leadership, and the one thing that is missing, you'd want the RSI to move above 69.1. It's what I said last weekend. You want the RSI to reclaim this level above 69.1 so it can have another fantastic run like it did here in early 2022 when the RSI was above 69.1. Otherwise, month to month, the issue here as we come close to the end of the month is if the following things happen. We have this reversing lower. We have a failed breakout, let's say in the new month, then a failed price breakout above 90.22, RSI showing negative divergence and being rejected at 69.1 would tell me that more than likely with those two things, if they happen, that the next major trend for energy is going to be down. Right now, we give it the benefit of the doubt for higher prices, but we would need the RSI to retake 69.1 and stay above 69.1 if the energy sector is to continue being in the leadership of the market. USO, which tracks crude oil, is showing a flat 200-day moving average. It's also showing an upward trending 50-day moving average. This is the concept of my method I call the more divergent breakout. So if there's going to be a push higher in crude oil, it needs to break out, or USO would need to break out above, let's call it the 72, 71, 80-ish price level. In other words, it needs to clear the recent daily closing high from 2023. And that breakout would really push things higher for USO if it happens. Right now, it is sideways and forming a base right here. I would say if USO goes on to trade below the upward sloping 50-day moving average, if it breaks below the 50-day moving average, that would be a net negative for crude oil. And also on the daily, there's this band of resistance here, which seems to be also stalling it right now. So I would say a breakout is needed by USO, by crude oil, above the daily closing high from 2023 if crude oil is to go on another run. Right now, it is sideways to lower, in my opinion. Taking a look at BTC now, we can see BTC pushing around 23,200-ish. Remember last weekend, I mentioned to you that as long as the daily for BTC continues to hold above 69.1, expect BTC to be sideways to higher. Is it higher? Yes. It's been above 69.1 for more than 3 weeks. In fact, it entered 69.1 somewhere here in the price range of about 17,500. As long as BTC is above 69.1 on the daily, give it the benefit of the doubt. And I also mentioned that more than likely, this RSI is going to go down. It's going to come back up, try to move above 69.1, be rejected. But price is going to do this. Price is going to drift lower, make new highs, and then that negative divergence, what I mean, I would anticipate higher prices even after a pullback. And then this negative divergence is the one that could set the stage for a meaningful pullback. In other words, right now, it's going to take a lot of energy to push BTC lower. As long as the daily RSI is above 69.1. This is trading 101 in my opinion. This 69.1 is a level that I came up with. It's very powerful. Take a look at Ethereum. Remember, Ethereum is below 69.1 now and needs a breakout above, let's call it 1,600, needs a breakout. And the RSI, if it retakes 69.1, would really push things higher. There'll be another explosive run in the cryptos. Otherwise, Ethereum is starting to look like it could be losing momentum. But I would not be expecting it to be dropping significantly until it breaks this RSI lows trend line. This can be used as a line on the sand. As long as it's above this line, I would say even Ethereum is sideways to higher in the days ahead. Remember, on the weekly, this is the issue. We talked about this with the NASDAQ, S&P 500, the Canadian market. This is the issue right here. This is an important level to watch, and I've been saying this. Remember, we broke down here in early 2022. We hit this level. If you missed this level last year in about late March, if you missed this level, my question is, what were you looking at? Because that was very obvious. And now we're in another obvious area. The more we start drifting lower here, the more this is going to be another reversal lower for Ethereum and the cryptos. And if we change our mind this time and we clear this level, then now there's something new in the works and we're going to be seeing this pushing to the upside. And of course, we all see this trend line, but I'll let other people discuss that. I look at the market from a different point of view, but that's also a trend line that other people are watching. Again, BTC on the weekly, this is a level that still should be a concern for bulls. You'd want it to be above this level. Otherwise, resistance on this level could mean the end of this recent recovery run for BTC. If you remember, I don't know whether it was weeks or months. For many weeks, we talked about this wedge, whether we were going to break out or below it. We ended up breaking out, so this was well telegraphed right there. That breakout is something we talked about for many months. And don't forget also, I try to remind you as often as I could that one should expect an explosive run in BTC when we clear this range. This is, again, MACD reading 101. Similar to the NASDAQ. Once you clear that, once you move above MACD zero line, you get this reaction. This should be trading 101, in my opinion. And so it is. I am EricWithMother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.